Good morning, good afternoon, good evening to wherever you are in the world. Welcome back to another episode of the Coffee Hour, where we're going to go over some stock market news, some broader macro stuff. We have a ton of things to go over. This should probably be a fairly quick stream, all right? But we're going to be talking about a new fund that recently came out, and it's been in a lot of headlines. All right, a lot of people are talking about this fund. It has exposure to some of those big AI names that are not publicly available yet, names like Anthropic, OpenAI, and we also have SpaceX in that mix. So we'll be going over that fund, ticker VCX. We'll be also talking about, some potential, macro things that are on the horizon, maybe a couple of months, maybe the first quarter of 2027, right? We're starting to hear more and more institutions, their analysts start to publish more, things on a potential recession, right? So we'll be covering that, what's happening with Iran currently, because that, of course, is affecting and impacting the stock market. We'll also be talking about Bmnr, and we'll also be talking about the Clarity Act. Okay, so there was some news that recently came out that we haven't covered yet, and it didn't seem like the market liked that news, right? Even though the Clarity Act is getting closer to getting put out on the floor for a vote, the industry leaders, one of which is Coinbase, did not like the language. So we'll be covering that here in just a moment. So as always, I do appreciate everyone joining for this stream. Let's go ahead and just dive right in. I see we have Sergio in the chat, so welcome. Always appreciate you joining, and let's get into it, guys. All right, so let's hop over to the S&P 500. And as you guys can see, we are doing okay for the day. We are up, just a little bit. I forgot to pull up the heat map, but here it is, the heat map. Okay, so across the board, looking pretty good. Microsoft has actually been taking a pretty nasty beating. Last I checked, it was below the 200 SMA simple moving average. So, there's a lot of talk of, people opening new positions on Microsoft. You have not seen them below this range since the 2008-2009 GFC. All right, since the 2008-2009 Great Financial Crisis. So, Microsoft could potentially be a buy right now. I'm not saying you go out and buy it, right? Not financial advice, but a lot of people have been talking about Microsoft being cheap right now, at least opening a small position, right? And then, of course, if it dips any lower, people can, continue to buy. Myself, I will not be opening a position in this, as I already have enough exposure as is. All right, through, index ETFs, that sort of thing. So, green across the day, not looking too bad. So let's take a look over the last couple of days. Again, just choppiness. All right, we still have the Iran conflict going on. And that is really driving a lot of this market. Over the last month, again, we're starting to chop down. We're starting to look like we're heading towards correction territory. And whenever the S&P 500 drops or corrects to 10%, that's pretty much correction territory. Over the last, couple of months, it's just been chopping. And then now we're finally starting to see it break down. Me personally, I still am in the camp that we're going to have a 15 to 20% correction sometime this year. It might correct. We might have a relief rally here and there. We might see the index pop up 1 or 2%, but I think we are definitely going lower. So I'm trying to hold on to as much dry powder as possible, because I do have some ETFs in mind. All right, looking at the IGV, which is the software tech ETF. All right, we've been talking a lot over the last couple of months about SaaS apocalypse. And it looks like that is still starting, or that is still continuing. Okay, over the month, we had a little bit of a relief rally. All right, there was a little bit of a relief rally. And, we saw that over, last couple of weeks that IGV was starting to recover 8.81%, but now it had that sell-off, right? So pretty much gave up the entire month's worth of gains. Over the last 5 days, you guys can see it's almost down 4.5%. We have gold, all right, up 3% for the day. We saw a dramatic drop, and I did not cover this because I was actually away from the desk for the last couple of days, but we saw a really crazy drop on gold. And shout out to anyone that was able to buy this dip. All right. There's, tons of people coming out saying that this was a opportune time, if you didn't have gold exposure, to start a gold position if you want that for your portfolio. Right. I actually had a stop loss on my GLDM position, and I removed it right before this happened, right as this was occurring. We were starting to go lower. I actually ended up removing my stop loss on GLDM, which is just a spot gold price ETF. And the reason for me is because I want to keep gold in my portfolio. if I see gold drop, maybe another 10, maybe another 15%, I will be adding to it, or I may be opening another gold position. I haven't quite decided what I want to do for that yet, because there's so many gold ETFs out there, whether they're income based, futures based, leverage based, or just a simple spot price, gold ETF. There's just so many you can choose from. So gold has actually done well. All right. It had a decent recovery, up again about 4%. It had a really big spike from that low, up about 4%. So we'll see if this continues. Again, it's supposed to be the one asset that's supposed to do well in times of uncertainty, geopolitical unrest, wars, whatever, right? Or fiscal responsibility by the central banks. And it just seems to not be cooperating, right? Definitely does not seem to be cooperating. Again, we had this really bad sell-off back in January, and it's just been chopping lower, right? Down almost 18%, 19% from its high. All right. But, if you're a believer in the debasement trade, right? Definitely a believer in the debasement trade. I am. But if you are a believer in that trade, gold and something like a Bitcoin should do well, right? Obviously, this was all peak euphoria, peak hype, right? Everyone's buying in gold, thinking it was going to be a super easy trade, easy way to make money. And, the market just has a way of humbling people. And this is definitely one of those times, right? One of the more popular YouTubers out there, well, he's not a YouTuber, but he is a subject matter expert, industry expert. Rick Rule is his name. And he did say a lot of people who love the narrative were hopping in at this time. And they're going to be hopping out because the price doesn't cooperate. Okay, Michael Saylor calls these people tourists. Rick Rule, he has a term for them, similar term for them. The people who liked gold, were all about gold, are selling out, right? Traders usually call these people the paper hands, the weak hands, right? So this flush is definitely just, again, probably another sign that, or just another way of the market getting rid of those people for the next leg higher. So we just got to wait. At least I'm waiting. Again, I'm not going to be adding to my position. I think gold could probably have another little bit more of a correction. And I do want to add to it. I absolutely do want to add to my gold exposure in my portfolio. I just haven't decided what. All right, silver having a pretty good day, up almost 3.5 or 3.6%. Okay, over the last 5 days, decent little recovery. All right, definitely better than gold. That's for sure. Because if we look at gold, down almost a full percentage point, but silver actually up almost 6%. Okay, over the last 5 days. And, just like gold, it had its peak euphoria. Everyone's hopping in, everyone's buying gold 120, and then it just sold off, right? The narrative that, silver is heading to $50, that could still be in play, right? That could still happen. The miners were absolutely destroyed during this time. Definitely the miner index ETFs. Okay, things like things like SIL or GDX, those definitely had a huge sell-off. So shout out to anyone that was able to pick them up on the cheap when they did drop. As a matter of fact, we can take a quick look at GDX. Let's see what GDX is up to. All right, so we can take a quick look at GDX. It looks like it's actually up 7% over the last 5 days. Over the last month, you guys can see it's down 22%, okay? Down 22% from its lowest lows, down 30%, okay? That is a very attractive entry. All right. For anyone that did get in or anyone that did open a position, there's several of them out there. You can go with GDX. There's also GDXW from Round Hill. There's GDXY from, Yield Max. There's also GDXU, which is a 3X leverage ETF. So I don't know if I'm going to be re-entering GDX, me personally, because an ETF I'm looking at does have a combination of spot price gold and also the miners in it. So I am considering that one as well. So I don't want to open up another position in GDX, but I'm also toying with the idea of other gold, exposure type funds. But can it go lower? Right? That's the real question we're all asking. Can this go lower? Maybe, right? Maybe the charts, from here looks like it was a pretty bad correction. Looked like it peaked, right here again, February 27th, 28th, after the sell-off, along with gold and silver from January 28th. So a month later, we saw a high, and then it just, again, corrected, just washing out all of those, weak hands of paper hands to tourists. So I just want to check out the chat now. So we have Sean. Hey, welcome back, Sean. Always a pleasure. We have Sith of Mordor. All right, green light therapy feels so much better. Absolutely. All right, I agree 100%. Green light therapy is very, very nice. All right, shout out to the 40 viewers on X and 21 viewers on YouTube. Do appreciate you guys joining me for this stream. All right, money cost into SLVO now. I always forget what SLVO is. Let's take a look. SLVO ETF. All right, so that's right. Yes. So it's a cover call fund for silver from UBS. Yes, UBS E-Trax. Yeah, I always forget this one. But yeah, I mean, year to date down 14.93%. That's not too bad, actually. That's not too bad. Let's see. Do tell us this ETF you're looking at. So let's see, the gold ETFs. I mean, I'm honestly considering GDMN, right? GDMN ETF. And this one's from Wisdom Tree. All right. So this one is one I'm considering to add to my gold exposure. It is using futures contracts. All right. So it's a little bit more spicy. It has, I think, 1.8 leverage in the ETF. All right. So this one's a little more spicier. Wouldn't recommend it unless you know what you're getting into. But I do like that, if we have a deeper pullback on gold, I'm definitely going to be adding something like this. This has, again, the exposure to gold and gold miners. So I don't want to have a GDX position, but there's, also, and I considered this as well. There's also GDXW from Roundhill. They used a swap contract in order to generate that income. But, I think I'm going to be opting out of this particular ETF, not because it's bad or anything, but just because I just don't want it, right? Yes, it's an income ETF. That's nice and all. But whenever I'm thinking about gold or exposure to gold, I want it to be very specific, right? I don't want an income fund at this time. I have considered income funds. There's KGLD from Curve. There's also YGLD, which actually, this one I spent a lot of time looking at as well. This is a 1.5x leveraged gold strategy income ETF, right? And they have less volatility decay than, the ones that do use leverage or swaps or whatever, right? And the reason is because they do quarterly rebalancing. This one, to me, is probably one of the more attractive ones out there. I just obviously don't have a position in it, but I've been really looking into YGLD, KGLD. There's also GLDN, I think, from X funds. There's a couple, because the ones from X funds, they also include the miners as well. That to me is awesome. So again, it's just, there's so many products out there, and I'm not in a rush to basically drop money, right? Money is not burning a hole in my pocket. I'm really trying to hold on to that dry gunpowder. But yeah, these are some of the ETFs for gold that I am looking at. Let's see. Sergio says, I bought more GDXW on the dips. Congratulations on that. Let's see what he also said. It is a crypto and gold ETF. Oh, yeah, there's also another one out there that's crypto and gold, of course. Yeah, and this is another one from Neos. I always forget Neos, but Neos also has IAUI. All right, so that is a pure, gold cover call ETF, if I'm not mistaken. So yeah, there's also one from Neos as well. Like every big fund manager out there that's in the income space, high yield space, has their own version at this point of, gold or gold miner ETFs. Although the ones from X funds, I have been looking at those as well, Nukes and Weapon as well. All right. So anyways, moving on from that, Bitcoin up, still above 70,000. I still think we're going to be heading much, much lower. There will be a rally, right? There will be a relief rally at some point in the future, but I think we're still going to head back down to about the 60s range, or at least the mid 50s, right? That's what I'm aiming for. That's when I really want to deploy a large chunk of change into Bitcoin or IBIT, using IBIT, right? But patience is the word of the day, and I'm trying to just be patient. But I will be deploying Bitcoin, or deploying capital into Bitcoin at some point whenever price comes to me. Over the last 5 days, Bitcoin has been doing actually really, really well. All right, but don't get it twisted, guys. All right, Bitcoin is still down a lot relative to the indexes, right? Something like the S&P 500, which is only down 4%, but Bitcoin is still down almost 20%. All right, so again, looks like it's trending higher. That's all neat and well. Everyone loves to see that, right? But we're not in a bull market. I don't think so. My mindset was that we were, the 4-year cycle was dead. A lot of institutional adoption, blah, 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 blah. No longer the case. And it does look like the 4-year cycle and the power rule are still in effect and still in play. So if you guys do believe that, if you guys do subscribe to that train of thought, then you will know that October is probably going to be the lowest of the low, but February is usually when a Bitcoin reaches a low as well. And usually there's like this choppiness that happens all the way up until October. So that is what I'm waiting for. October is probably my time frame of when I'll dump in again, probably walk away with a full Bitcoin if I can, if the timing is correct, if the timing matches up. Of course, don't time the market, yada, yada, yada. But that's when I'm going to be aiming for, and that's when I think we'll probably start to see Bitcoin start to climb back up. All right, so right now, for the next couple of months, it's going to just be accumulation for me. All right, so enough of that. We're going to be moving into the geopolitics. All right, the geopolitics section, because a lot has been happening over the last couple of days. You don't know who's telling the truth at this point, right? You don't know if Trump is telling you the truth. You don't know if Iran is telling the truth. The media is probably whipsawing. They probably have neck problems at this point because the news just keeps whipsawing between Iran and basically Trump saying one thing over the other. So before we move on, Sergio says, interesting, YGLD. Is there a Global X gold fund? There is a Global X gold fund. I forget what that fund is, but there is one for sure. We also have Randy in the chat. Hey, good evening. Hey, appreciate that. Go Bitcoin. Absolutely 100% bullish on Bitcoin. I'm also very, very bullish on MSTR, as you guys know, and Bmnr, right? So we'll be covering some of those a little later. All right, so let's move on to the big first piece of news, and that is Iran has sent up 5 conditions to end the war in the Middle East. Before I get to that, I want to put this out, right? Because I thought this was a really interesting thought from Peter Schiff. If you guys know who Peter Schiff is, you either love him or hate him, but he is a gold bug. But he put out this interesting thought, and I thought this is exactly what is happening right now. I think Iran knows they can win the war just by surviving long enough for Trump to surrender by claiming the biggest victory in the history of war. They know Trump will ultimately be guided by poll numbers, oil prices, and the stock market and the U.S. economy, not Iran's position. And I think this is extremely accurate. And the reason is because, one, this is a midterm year, right? This is a big deal for his side of the house. But you also have Trump pretty much doing a Trump put whenever the stock market is going down, whenever the market's going down, right? And not only that, he's getting pressured by all the Gulf nations and now the Asian countries that are running into a lot of problems because you have posts like this that are coming out all over, Southeast Asia. But due to gas shortages, people are now walking to work in the Philippines, right? They used to have a cap, at least in Thailand, for diesel or fuel, and now they had to remove that cap, right? So now gas prices, fuel prices are going to go through the roof, right? So Southeast Asia is dealing with this in a pretty big way, or a big negative way, right? People have to work from home, or they have to walk to work more. Public transportation, even that is being impacted, right? So this is a lot of pressure. This is a lot of things happening in the broader world. And that's why I think Peter Schiff is actually kind of has a point here. Now, another point, right? China, and so let's talk about the United States. The United States is one of the biggest exporters of energy, right? Oil specifically. Okay. So that's why when Tom Lee says this is bullish, high oil prices are bullish for the United States, it finally clicked. It's like, yes, they actually produce a lot. And not only that, in the Middle East, a lot of these energy producing, facilities, LNG, natural gas or oil, whatever, they're not coming back online for a very, very long time, right? Some of them are so damaged that it's going to take, months for them to come back online. It's not a simple switch on and off for these facilities just to come back online. So that is a big deal. These ripple effects are going to be felt for months. Okay. So anyways, Iran's 5 conditions to end the war in the Middle East. came out, right? So they want a complete halt to aggression and assassinations by the enemy, establishment of mechanisms to ensure war is not reimposed in Iran, guaranteed payment of war damages and reparations, conclusion of the war across all fronts for all resistance groups in the region, formal recognition of Iran's sovereignty over the Strait of Hormuz as a guarantee for the implementation of commitments. They basically want to turn the Strait of Hormuz into a money grab where they will charge ships coming to and from, similar to how we see like the Panama Canal or probably the Suez Canal, right? Which is I'm going to bring up here in just a moment. So just a lot of crazy crap happening out there in the broader world. All right. This war is not going to end anytime soon. You have Trump saying that they're talking. And before I continue, this is a politics-free channel. Okay. I don't care if you're left, right, middle, blue, red. I could care less. I'm just reading the news and, trying to connect some dots here. Okay. So again, just leave your probably leanings at the door and let's see what we can take from this information, right, as an observer. Okay, so anyways, here are just my thoughts about this. Okay, so one, you have Trump saying that he is communicating with Iran, right? And then Iran said, no, that's not true. They came out and said that's absolutely false. Then you had Iran say, we'll only deal with JD Vance. Okay, they want to talk directly to JD Vance, which in my opinion is probably a stall tactic. You have Russia continuing to send drones, supplies to Iran to basically keep this war going. And then you had Jared Kushner, Steve Witkoff, who are, envoys for the Trump administration, basically get sidelined, say that, Iran's like, I don't want to talk to these guys. So again, this is just my opinion why this is potentially a stall tactic. And then you have JD Vance, who is reported that later is possibly going to Pakistan, because Pakistan is going to be the mediator in all of this. So you have Pakistan now in the middle of all this, trying to mediate between Iran and the United States, right? Iran is still launching missiles at the Gulf nations, right? There's news reports that they stopped, but reality is a totally different thing. And you also have the United States saying that we're going to do a 5-day ceasefire. We're not going to bomb anybody. And Israel, right after that announcement, was bombing a bunch of stuff, right? And then you have Iran saying we're not going to agree to any ceasefire, at all. Like, we never agreed to a ceasefire. We're not going to let the United States dictate these terms. This is why I said in the very beginning of this conflict, when all this started kicking off, that Iran is not Iraq, Iran is not Afghanistan. This is a completely different animal, all right, altogether. And I think there was some miscalculations, personally, by the administration, right? Because instead of attacking the United States head on, they're dealing with the Gulf Coast, right? And the Gulf Coast is a major shipper of energy. Okay, so they're basically cutting that off and, causing all these problems globally, which could potentially lead into a recession, right? We keep hearing this word of recession. So there was an interesting article that came out. Well, let me just cover this real fast. So Iran war, Tehran dismisses U.S. ceasefire conditions as Israel continues to step up its attacks. They've been taking out a lot of infrastructure, bridges, etc. So I'm not going to even cover this, but this was also really interesting. Okay, this is coming from the Kobesi report. Iran says it could shut the vital Bab el Mandeb Strait if attacks are carried out in its territory island, because there's a lot of talk right now of the United States potentially taking Karg Island. All right, now Karg Island is somewhere up here, if you guys can see my mouse, but somewhere up there. In order for them to get there, they'd have to be launched from, Kuwait, Iraq, Saudi Arabia, Qatar, Bahrain, right? Those, wherever those troops are located. You have a couple aircraft carriers way out here outside of the Strait of Hormuz. So to actually bring ships through a potentially mined strait is a hazard, right? You have the 82nd Airborne Division that is there. You also have 2 Marine Expeditionary units that have arrived. Let's just be honest, you don't have these units in the area for fun, okay? Like the Trump administration placing these, or the Department of War placing these units there, is not for fun, okay? There is a high probability that there could potentially be an invasion, and the 5-day ceasefire that Trump wanted was probably a stall tactic as well, right? But Iran has already said they're tracking all these movements. If you even make a move, etc., right, this could create a bigger conflict. But coming back to Bab al-Mandab, right, you guys notice up here is the Suez Canal. All right. And them, if Iran was to work through their proxy groups here in Yemen, the Yemeni Houthis, right, to start striking or contesting this strait right here, this is going to impact the global economy even more, right, on top of what is already going on. 12% of global seaborne oil passes through Bab el-Mandeb. The Bab el-Mandeb Strait is the world's fourth largest shipping checkpoint, okay, or choke point, excuse me. All right, so if both the Hormuz and Mandeb are closed, total offline capacity could near 25 million barrels per day, or 25% of global supply. Okay, so why is the Suez Canal so important? Well, it's vital for global trade, energy, and economic lifeline, connecting the Mediterranean and Red Seas to provide the fastest maritime route between Asia and Europe. So Asia is going to be impacted. Europe is also going to be impacted by all of this. Okay, so craziness happening. And this could also all lead to this big thing here, recession, right? Recession. Let's see. I just want to read this real quick. Are we still winning or are we lying? Brother, we're doing something. All right. We're doing something. Hey, Skeptic, welcome. All right. I hope you all know we're not done going down. Absolutely not. Absolutely not. I still think we are heading much lower. Anyways, recession odds climb on Wall Street as economy shows cracks beneath the surface. Okay, now we did say that we're going to start hearing this word recession start to come up and rear its ugly head. All right, but this is starting to actually hold some weight now because, again, this conflict is going to continue. It's going to continue easily for the next couple of weeks, if not the next month or two. And not only that, if that other location, all right, that other location is impacted or contested, yeah, we're definitely going to be heading that way. For sure, we're going to be heading that way. So economists have pulled up their risk assessments of a U.S. contraction amid heightened uncertainty over geopolitical risk and a labor market that for the past year has shown strength. I'm concerned recession risks are uncomfortably high and on rise, said Mark Zandi, chief economist for Moody's Analytics. Recession is a real threat here. Of course, that's what they also said last year during the tariff tantrums, okay? Twin concerns about growth and unemployment have triggered talk of stagflation, characterized that the Fed Chair Jerome Powell has rejected, but the threat of a prolonged war, pressure on consumers, and a labor market that outside of healthcare lost hundreds of thousands of jobs last year have kept concerns elevated. So it's just getting crazier and crazier and crazier. All right, so Wall Street forecasters are raising their expectations of a recession. Moody's Analytics model has raised its recession outlook for the next 12 months to 48%. Goldman Sachs boosted its estimate to 30%. Wilmington Trust has the odds at 45%, while EY Parthenon has it at 40%, with the caveat that those odds could rapidly rise in the event of a more prolonged or severe Middle East conflict. Okay, if this happens, this is definitely a more severe Middle East conflict, right? If Saudi Arabia joins in on the fight, well, now you have an expanding war. Okay, this turns into an expanding war. It won't be long before probably Qatar or Kuwait start to get into the mix. As a matter of fact, up here where you can't see is Iraq, and there's a lot of interesting developments happening in Iraq. From a geopolitical standpoint, right? The U.S. Has some installations over there. Some of them, well, one of them has been evacuated. It's coming under a lot of heavy drone activity, a lot of potential for attacks. The United States responded by having basically a Warthog, not an AC-10, excuse me, just a Warthog. If you guys know what that plane is, basically go in and strike some of these militants that are Iranian backed, and that's creating problems and frictions for the Iraqi government, right, which is supposed to be a U.S. ally, but now it's creating some, friction up there. So Iran has basically said that they want a lot of the United States bases closed, right, and out of the region. So again, in my opinion, there's a lot of stalling. There's a lot of, tit for tat going on. I don't see this conflict ending next week, right? Anything Trump does is going to be the typical playbook where it's a good news bad news on Friday and then good news on a Monday, right? Just like he announced the ceasefire on Monday, right? He announced that ceasefire and the markets ripped, right? But, then Iran quickly came out, said that is not the case. We're not even talking to the guy. He must be talking to himself, right? So again, who do you believe? It's just a lot of craziness, and the markets are just whipsawing up and down. So Kalshi actually has a recession odd, a potential recession odd, at about 12% in Q1 of 2026. All right. Actually, this might be old. Yes, this is old. Okay. Well, I don't know if because we're pretty much going to be over Q1 here soon. But on Polymarket, a U.S. recession by end of 2026 is starting to rise. Right now, we have a 35% chance. Okay. If we look at the last month, this has been steadily rising. Okay. So we're up to 35%. So the market believes that we are headed for a recession. All right. So just continuing on with this, I'm concerned recession risks are uncomfortably high and on the rise, said Mark Zandi, chief economist of Moody's Analytics. Recession is a real threat here. All right. War drives the fears. An oil shock has preceded virtually every recession the U.S. has seen since the Great Depression, except for the COVID pandemic. All right. You guys can see here these charts, these thin blue lines you guys see here. I hope you can see them on my chart. These represents recessions that have occurred. And you guys can see that spikes in oils usually resulted in a recession, right? A recession of some sort, right? We see it here in the 90s. We see it here in the 2000s. We see it here 2008, 2010, right? That was another recession. That's how high oil was, $138 a barrel. That's crazy. And we look like we're heading that way again. Back in Q2 of 2022, we also saw oil happen, but we didn't hit a recession. We had a mini recession during the pandemic. All right. The negative consequences of higher oil prices happen first and fast, as Andy said. If oil prices stay kind of where they are through Memorial Day, certainly through the end of the second quarter, that'll push us into recession. All right. Troubles with jobs. This is also, the second piece to this puzzle or to this story of recession. Potential recession, all right, is troubles with jobs. We have already seen what the jobs market is looking like. Last report was abysmal, disgusting. Okay, the U.S. economy created just 116,000 jobs. Oh my God, for all of 2025, and lost 92,000 jobs in February, while the unemployment rate has held steady at 4.4%. That's largely because of a dearth of firing rather than a burst of hiring. All right, excluding healthcare related jobs, more than 700,000 in all. Payrolls outside of those areas declined by more than 500,000 over the past year. All right, just a little bit more. Let's talk about stagflation. Powell rejected the characterization in the news conference following last week's policy meeting. He said, I always have to point out that, that was the 1970s term at a time when unemployment was in double figures. Right now we're at 4.4% and inflation was really, really high. Again, inflation for us is hovering between 2 and 3%, right? If you believe trueflation, we're about a percentage around that. If you believe in the BLS numbers, and we're I think at 2.9 or 3%. But anyways, that is not the case right now. It's a very difficult situation, but it's nothing like what they faced in the 1970s. I reserve stagflation for that, the word for that period. Maybe that's just me, Powell said. All right, so that is our geopolitics and our macro segment. All right. Doesn't mean be scared. Doesn't mean sell everything, flock to cash, none of that stuff. Right. But it would be a good time to, of course, position yourself if inflation was to happen. I still think there is a big print coming. I had posted in the Discord at some point that, war usually means the printing of money at some point. And, we saw Pete Hegseth, Department of War Secretary, request $200 billion for this effort, for this conflict. Okay, so they're trying to front run, already getting a lot of money so they can keep this war going. They were spending about $1 billion a day just being in the conflict. Okay, so $1 billion a day. Whatever, we can print more, right? But that's usually what happens. And then you're going to have oil that's going to be extremely high, right? If these prices continue to rise, there will have to be some type of print that happens. I don't know what that looks like. I don't know what the Fed will say. All right. I have no idea as far as, what he's going to say specifically as far as Jerome Powell, but, they will say something. There will be some type of catalyst. and it's going to be related to oil if oil prices continue to stay high, right? You need to have all these tiny little catalysts happen, all these little events happen that's going to lead to this big print. At least that's part of my thesis, and that's again why I continue to hold gold and Bitcoin, and why I'm going to be allocating more to gold if we go a little bit lower. All right. So with that out of the way, all right, recession. Let's talk about this crazy fund. All right, I hope you guys can see this. With a almost 1,500% return in 1 week. All right, that is the Fundrise Innovation Fund. You guys have heard Fundrise, I'm sure. They're mostly related to real estate, right? They run a non-traded public REIT, right? Crowdfunding REIT. All right, so this is Fundrise, but they had an innovation fund, and they listed it for public investment. So under the ticker VCX. So this is VCX, crazy fund. And if we could take a quick look, yeah, they don't include it. So what I did was actually go to Fundrise website, and this is what all the big hoopla is about VCX. Okay, you have a 20% allocation in the fund to Anthropic, who is not publicly listed right now, right? They are, supposed to go public sometime later this year or the first half of 2027. Same thing for OpenAI, et cetera. But they have Anthropic, they have Databricks, which is a data analytics company. You have OpenAI. Everyone knows OpenAI, right? ChatGPT. You also have Anduril. Anduril, I think, is a big one. They produce autonomous weapons for the Department of War, for the Pentagon, et cetera. You also have SpaceX, right? SpaceX is in here. You guys know who SpaceX is. As a matter of fact, we're going to be covering SpaceX here in just a moment. And then you have a couple other ones which I've never even heard of. So this fund is all the hoopla right now, right? If people want to get exposure, you had Bmnr make a huge investment into Orbs that's led by Dan Ives. Orbs has, I believe, a 30% allocation to OpenAI. So if you wanted a proxy for investing directly into OpenAI, you could invest in Orbs. Okay, Orbs, I think, is hovering at like a buck something right now, right? Had a crazy run up when they announced their new chairman, which was Dan Ives, and something else. I think they became a treasury or something. I don't know. I don't really follow Orbs all that much, but if you want I would not buy it at these prices. I'm going to be honest. It does look tempting. It looks like it's just going to continue going up 1,500% for the week. Fair value for this right now, or NAV for this right now, I think it's like $20 or a little under $20. And you're paying an extremely large premium for this fund. Okay. You're paying something like $390 on hype and premium alone. So if you're going to be opening a position or thinking about opening a position in this, definitely be a little more careful. But again, these are some of the biggest names in the AI story right now. Anthropic, OpenAI, right? Anduril, if you're following kind of autonomous weapons and robotics. Same thing for SpaceX, right? Data centers in space, right? So these are some of the biggest names that people want exposure to, but they can't. It's hard to get that exposure. You'd have to go through other crowdfunding sites, or you would have to be a accredited investor, right, to get to actually buy shares of these companies. So this VCX from Fundrise, it's just a fund that invests in these companies, so you get that exposure. So if you're betting on the future or bleeding edge or whatever, or you want to invest in private companies, this could potentially be one way to go about that. All right. Let's see this comment. So this is from Build. Almost everything is owned by Fundrise investors who were offered the pre-IPO 6-month lockup, and the shares came in at $18.92. We were only allowed to buy an allocated amount of shares initially. Man, I missed that IPO. I'm kicking myself in the ass every day because this hurts so bad, because I was a Fundrise investor. I did get access to that IPO. I did have the money. I think you had to start with $10,000 if I remember correctly. That was at least a minimum amount. And I totally didn't do it. Right. I did not do it. And I kick myself every single day because I was and I still am a big fan of Fundrise. I don't have anything in Fundrise. I actually took all my money out and went to public REITs instead. But I like Fundrise. They've been responsible. They were very responsible during the pandemic. Yes, they paused redemptions, but they never, the funds themselves never got liquidated, or they didn't go into default, or their properties didn't go into default, or any of that. They were very responsible the entire time. I'm a huge fan of Fundrise, and I'm glad that they made this public, because for a long time you could just put money into Fundrise. You could allocate it to different funds. They even have a private credit fund as well for anyone who might be interested in that. So they have a private credit fund. Their venture fund turned into VCX, and then of course you have your real estate, which it's basically REITs, real estate investment trust. But they have different ones, right? They have the income fund. They have a flagship fund. I don't know if they changed it. It's been a long time since I looked at this. But yeah, for every dollar you put in, it's getting diversified across all of these different properties, right? And you can invest with something as low as, I think, like $100, maybe $500 now. So for any investors looking for like real estate exposure, this could potentially be just one way. Just know that redemption's not easy, right? It takes about 3 months to get fully redeemed. But I've been in other non-trader REITs where it takes a year to get. It's taken a year to get $1,000 out of Realty Mogul. It took 3 months to get all of my money out of Fundrise, which was, much more, significantly much more than $1,000 from Realty Mogul. So, again, it's not so easy to click and hit sell and then have your money out the next day. It does take a long time. But, going back to VC, this is a publicly traded CEF, closed-end fund. So you can, just hit that sell button if you want to get your money out. So anyways, shout out to anyone who was able to get in on this fund, who was smart enough to get in on that fund on that pre-IPO. All right. Sounds like Build was able to, and at least I hope you were able to, and I hope you're happy with the fund so far. VCX makes you regret trying to be a good investor. Man, I'm going to just throw the book, The Intelligent Investor, in the trash. I'm going to just go ahead and delete all of my Kindle books that I have and all my Audible books, on responsible investing. Who needs this? Who needs this garbage? Just YOLO all your money into this fund, and you would have came out way ahead, right? Way ahead. Fundrise isn't private equity. What Fundrise is it's a crowdfunding platform. So I forget which law it was. It's been a long time since I covered it, but there was a law that was passed. And it basically allowed for crowdfunding. So these investments used to only be available to, accredited investors. But with crowdfunding, now you can access public non-accredited investors, right? So someone like you, me, retail, we can invest in these REITs that were not allowed, or that were not traded on the public market, something like an Avalon Bay Community, right? Or a Realty Income, ticker O, right? Those type of REITs. So crowdfunding came around, very popular. Tons and tons of platforms came out with crowdfunding. They were crowdfunding oil. They were crowdfunding real estate. They were crowdfunding debt, debt market notes for real estate. I forget. It's been a long time since I looked at this stuff. But there was a ton of crowdfunding websites, platforms that came out. A bunch of them ended up failing, right? A bunch of them ended up, getting liquidated or going into default, especially during the pandemic, and definitely after rates rose to those really crazy heights, right? In a quick succession. So a lot of those platforms ended up going bust, but Fundrise has stayed around. It is not private equity because it is crowdfunding from public markets. Private equity, usually you need to have like accredited investor status, or you need to be, I forget the investor specific, but you need to have a certain label for you as an investor, right? You have to have a certain amount of net worth, not the $1 million net worth for accredited, but it's something much more. I think it's like 10 million or something like that in assets, et cetera, et cetera. So that is not so much. So anyways, Fundrise is not private equity. So let's see what else we got here. Yes. So for Fundrise, you can only redeem every quarter. Yeah. Come September, the lockup ends and the sell-off begins. Oh, okay. I see. Okay. I see. Yeah. So, yes. Yeah. It takes about a quarter to sell out. So anyways, moving on from that. So again, this is VCX. Again, I don't plan to open a position in this, although man, I hate that I missed this, right? This run up, absolutely crazy. But if you want exposure to the AI story, and to these names, definitely something to look into, right? But we also have Robinhood. Robinhood has a fund called RVI, Robinhood Venture Funds. I have seen news, although it's not so much. There hasn't been an update in recent times since the launch of this fund, that Robinhood was poaching for a position in OpenAI and Anthropic and SpaceX, right? But that hasn't materialized yet. But they do have Databricks, Revolut. I don't know who Mercor is, or Airwallex, or any of these other names. I do know Stripe, and Stripe is a big one. I don't know who 11 Labs is. So Robinhood Ventures came out with this fund not too long ago, right? Had a IPO, and on the first day, I think it was down like 12%, right? But recently, it had a really nice spike up of 25%, and that was because its addition or its investment into Stripe, right? Stripe is a payment system. A lot of people are hoping this thing goes public. It was built by two brothers, I think in like 2006 or 2008 or something like that. It was built by two brothers, and now it's like a multi-billion-dollar company, right? And they've raised no public money, right? It's all been investor money. So big deal here, right? Especially if you believe in Robinhood's ability, or not Robinhood, but the manager's ability to invest in great names, right, for this venture fund. So this is also another consideration for people who are interested in like a private fund, or a fund that invests in private companies, I should say, not a private fund, because you can access it, right? So it's public. Let's see what else we got. So Skeptic says RVI is my moonshot. Gambling. I like it. But it's a good moonshot. I mean, if you believe in the company Robinhood, right? Robinhood, this will be accretive to Robinhood or to Hood holders, because they're going to be making money on the assets under management, right? But if you believe in these companies and Robinhood's ability to pick the best companies, or Robinhood Ventures, I should say, to pick the best companies, because I believe their CEO for this fund it's not Vlad, it's somebody else. Someone else. But if you believe in their ability to pick the best companies, for either artificial intelligence, crypto based, whatever, then something to consider, right? I don't know most of these names in this fund. All right. So moving on from that, we're going to talk about SpaceX. So SpaceX stock rallied on reports of SpaceX imminent IPO filing. Again, this was all rumor. There was nothing concrete about this. As a matter of fact, the article that did post it, you have to subscribe to and pay for. I've not found anything else outside of that. So take this for what it is, but it rose, what is it? A rising tide lifts all ships. So basically the entire space sector got a lift from this news. Space stocks rallied Wednesday after a report that SpaceX could file to go public this week. All right. Satellite designer AST Space Mobile, aerospace company Rocket Lab, and rocket maker Firefly Aerospace each saw steep gains. The highly anticipated SpaceX IPO could value Elon Musk's company at $1.75 trillion. All right, we covered this a long time ago in one stream. But yes, this will be probably $1 trillion valuation on IPO, right? Which is absolutely insane. The counter to this is that there's going to be, in my opinion, all right, and I've heard this same thought on other podcasts as well, is that when SpaceX does decide to IPO, there's going to be a lot of investors who are in SpaceX way before that are now looking for probably the exit, right? That are looking to get their money out. So there is a potential for, investors, retail to basically be used as exit liquidity. It really depends on how much you believe in Elon Musk and, the story behind SpaceX, data centers in space and all that other stuff. SpaceX, they did just roll up XAI into SpaceX, and Starlink is also a part of SpaceX as well. So data centers in space, could that be a real thing in the future? Love to be seen. I mean, there's so much technical hoopla about that, right? Like, where are they going to draw power from? How, when you think of a data center, you think of a football-sized, field of servers and racks and things. Is there going to be this building that's just, floating in space? I mean, that's an easy target. For people who don't know, Chinese satellites, they do have an armament on some of their satellites. Same thing for Russia. Russia does have armament. Same thing for the United States, right? All these world powers have some type of, ballistic munition on their satellites, right? They shot each other's satellites down before, right? So having a whole data center in space, that would be a really easy target. So I don't know how this is going to look. I have no idea what this could potentially look like. Maybe there's a data center on the moon, right? Or maybe there's an asteroid somewhere and they put a data center. I have no idea, right? It is just hard for me personally to really fathom that reality, just because of my technical background. But maybe it's, maybe there is something there. I just don't see it at this moment. But anyways, space stocks soared Wednesday following a report that Elon Musk SpaceX could file to go public as soon as this week. According to the Information, which is the publication that published this news, the highly anticipated stock market debut for SpaceX could raise over $75 billion. CNBC previously reported that it could be the biggest IPO ever, seeking 1.75 trillion valuation. SpaceX acquired Musk xAI last month in a deal valuing the combined company at 1.25 trillion. So Musk bought, from Musk. The rapid build out of data centers to support AI has been blamed for rising electricity costs. Sending data centers into space has been proposed as a solution, but faces numerous barriers, including high costs and limited rocket launch availability. All right, SpaceX currently operates the Starlink constellation with over 9,500 satellites in orbit. In January, Musk proposed a larger project that would launch 1 million satellites, an effort that's been staunchly opposed by scientists for environmental threats. You also have Amazon that is looking to do something similar and have, these internet satellites in space, right? They want to compete basically with Starlink. So let's see what else we got out here. I'm just checking the comments real fast. So we have from Rodstaman, changing his name every other day, but we have from Rodstaman, saving my money for this. SpaceX IPO will be my jewel. Nice. And we have from Gary Balda saying, hello, yes, I got in RVI at the IPO price offered by Robinhood. Love Databricks. Awesome. I still don't really know what Databricks is or what any of those other companies are. I haven't even peeped at them. But I do know the big names: Anthropic, OpenAI, SpaceX, and Anduril for sure. So I'm still kicking myself thinking about VCX. All right. We also have from Hao Hing Pao. How would they do hands-on maintenance of orbiting servers? See, that is a good question, right? That was one of the biggest questions for LEO versus not radio towers, cell towers. So big REITs like Crown Castle Inc. and American Tower, there's a bear case against them, saying that these LEOs are basically going to overtake cell towers, right? But you had Elon Musk say that no, cell towers will actually complement LEOs, and LEOs will complement cell towers. And the reason is exactly that. How do you manage or maintenance orbiting servers, right? How do you manage or maintenance a data center in space? You're not exactly going to have a technician living up there, or maybe you could. I have no idea. But yeah, sending people up into space to fix things is not something that's really just easily feasible at this time, right? At this moment. Imagine how much fuel a rocket takes, and us having a big problem with fuel. I mean, yeah. And I'm in agreement. How would you service this stuff? I mean, servers, switches, racks, they break all of the time, right? They break all of the time. Plus you have environmental dangers as well, or environmental hazards. Cold. Space is not exactly, a good place to have, servers, right? Even though there's, and I'm sure there's probably people in the chat smarter than me at this, but having a server, data farm, data center farm, whatever, you're going to have a lot of HVAC, right? You're going to have a lot of ACs, but they're tuned to a specific level. They're tuned to a specific level. Having data centers in space, I mean, are you going to have HVAC, or are you going to let them just be cold, right? Let them just have the environmental, coldness, I guess, cool these servers, right? If a server reaches a certain level where it's too cold, it can actually start to run into problems. So again, what does a data center in space look like? And that's what I find having such a hard time believing that story. Now, can Elon Musk figure it out? Yeah, probably. He has some of the best engineers out there. But this is also the same guy who said he wants to build a building on an asteroid and have this asteroid hovering around Earth, right? Again, a lot of cool things, a lot of futuristic things, but how, is it really possible? I mean, you had Saudi Arabia trying to build a line, which was the most ambitious project probably in the world, and that fell flat on its face. So having an asteroid, and they have a ton of money as well. So having an asteroid orbiting Earth with, a skyscraper on it, I don't know. Having data centers in space, I don't know. But, again, I could be completely wrong. In space, the sun gives 100 or 1,000 times more energy than Earthbound solar panels. That's a good point. How would they manage the heat dissipation? That's exactly right. That's another thing. And that's what I was alluding to was, having servers in space. I mean, how does that work? Let's see. So we also have from Sergio, Databricks is a big deal in big data lakes. At least that's what my friend told me. Let's see, from Padre, the service charge to get a plumber to the moon. Man, that would be crazy. That would be crazy. Let's see. Polycarbon is very cool and resistant to heat. Yeah, I mean, you're probably gonna have to redesign server racks, right? Or whatever a data center in space looks like. Maybe there's no servers, maybe it's something completely different, right? Maybe they redesign or rethink the whole idea of what a data center is supposed to look like. All right. So, anyways, with all that being said, that is the SpaceX story at this moment. Okay. So let's see. Yes, we already covered all this. So anyways, that is the story with SpaceX. All right, moving on to the Clarity Act. All right, so stablecoin yield, this came out a couple of days ago. Our stablecoin yield in Crypto Clarity Act won't allow rewards on balances, latest text says. And this is what has the entire crypto industry in an uproar. Basically, it's the banks trying to be the banks and hold on to that, right? The net of all of this is that, if I, as a consumer, want to put money, why would I keep money in a bank account, with Bank of America, JP Morgan, or whoever, where I earn no interest on my money, right? Or just garbage interest, right? Maybe 1%, maybe 1.5%, whatever. When I could just drop it into a stable coin, with Circle or something, and earn a 5.5% interest on my stable coin, right? And that is what's been the biggest problem. But the latest update to the to the Clarity Act is that, okay, fine. You can have rewards, right? Credit card rewards, whatever. You can have, interest on that, but you cannot have interest on just a, standard account that is in stablecoin, right? If I move my money, $10,000 from, I don't know, JP Morgan and put it into stable coins, I can't earn that interest. That's really what the fight is about. But if I spend money on a credit card, I can earn interest on that, on that spend, rewards. So that's really what this fight is all about. Again, it's just the banks trying to be the banks, trying to control everything. I'm going to get out of my personal feelings about that. Let me get to this news. All right. The newest language on the stablecoin yield and the Clarity Act has crypto insiders cringing, according to a source familiar with the industry's opening chance to see the text. Stablecoin yield, a point of contention between bankers and crypto platforms, was the subject of a compromise crafted by senators negotiating the bill. The latest version would grant rewards programs on a narrow basis. This is key word. All right. As long as they don't resemble interest from bank deposits in any way. So that is the biggest problem. This is really what is holding up the Clarity Act. Excuse me, I got to take a sip of coffee. My throat is getting coarse over here. Whew, okay. I hope you guys are enjoying the stream. Hope you guys are getting some type of value from it. All right. Shout out to the 96 viewers on X and 31 viewers on YouTube. All right. I do appreciate your guys' support. Make sure you hit that like or follow if you like this content. Let me know what you guys think. If you're getting any type of value, any type of entertainment from this stream. All right. Okay. Yeah, 14 real says this is it right here. Banks basically scared of competition. That's what this is all about, right? That's what this is all about. They just need to step out of this. 100% agree. All right, so moving on. All right, crypto industry insiders got their first look at the revised market structure bill in the Senate, and the opening impression was that the language on allowable stablecoin yield was overly narrow and unclear, according to a person familiar with the current draft. The new language, which was announced Friday by Senators Angela Brooks and Tom Tillis, would ban yield payments for simply holding a stablecoin. So again, if I open up an account with, I don't know, some brokerage, right, and then just put my money into the stablecoin, I could not earn interest under this current revised bill, right? Whereas right now you absolutely can. But now they're trying to change it where it's only rewards on credit spend, right? On credit cards or rewards cards. All right. Bankers had insisted that the stablecoin rewards looked nothing like interest-bearing bank deposits because they argued that the competing product could hamstring the industry and strangle lending. So the compromise will allow rewards programs on user stablecoin activities, but not on balances. So rewards on reward programs, spending cash, you see those all in the credit cards, cash back, all that kind of stuff. But you won't earn anything on a balance of stable coins. The stablecoin yield lobbying fight between the crypto sector and the banking industry had stifled progress on the legislation for a while, but it's not the only sticking point. The industry will still need to see the final approach to oversight of the decentralized finance or DeFi space, which had remained an area of concern for Democrats who had wanted to ensure illicit finance protections. And the Democrats have also insisted on a need for a ban on senior government officials profiting personally from the crypto industry, a provision aimed squarely at President Donald Trump. Now, you know what? I honestly would agree with that because some of these damn officials, man, with their meme coins coming out and their crap coins, they're definitely profiting from this from, people. But again, I will die on this hill. If you're stupid enough to buy a meme coin for someone and you're upset you lost money and you got rugged, you deserve it 100%. I don't care what the narrative around that meme coin is or that it's supposed to be, give you access to all this stuff, or they brought on these, really big name partners. I don't care any of that. If you invest into a meme coin and you lose money, you deserve it. Point blank. They're going to get rugged. Most of the coins in crypto are a scam. So anyways, that is that. And we saw that once that news dropped, we had Circle, the internet stock, all right, drop a ton of money. Okay. Not internet stock, excuse me, but Circle, the stablecoin issuer, right? Dropped well over almost 30%, right? And slowly climbing back up, right? Year to date, had a really nice pump, all because of the Clarity Act. And then it just dropped, okay, over the last year. And this recently IPO. This isn't an old IPO, by the way. This company came out last year, and here is the chart, right? So over the past year, it's still up about 25%, even though it's had some really crazy volatility. And of course, all this is right here around the time crypto started selling off, right? Bitcoin, everything. You had those mass liquidation events. So the Clarity Act has obviously been really bullish for this company, Circle. Of course, the IPO, you see that it had this really crazy spike. And just like most IPOs that year, in 2025, most of them sold off right after the fact. So we'll see if Circle is able to get back to it, right? Get back to these highs, or at least get out of this rut. Again, that was a pretty significant drop, on this news. Any legislation from the Clarity Act is going to impact Circle or these stablecoin issuers. All right, so moving on. One last bit of news. We have Bitmine in the news, and Maven is live. All right, this is coming directly from Bitmine. We are open for business and will be the world's largest single entity staking operation. All right, PS, you can stake your Ethereum and other crypto with us. So Maven is going to be a staking platform for Bitmine. So companies or institutions or whoever can stake on Maven. Okay, so here it is real quick, in case anyone is interested in what this project is and if this is beneficial for Bmnr. All right, launched Maven, Made in America Validator Network in March 2026, a proprietary Ethereum staking solution aimed at becoming a premier secure staking platform for institutions. Maven uses US-based infrastructure with Bitmine staking over 3 million ETH, all right, roughly $6.8 billion, positioning itself as a leading Ethereum treasury company. All right, the purpose, Maven was launched to provide high-performance, secure validator services, focusing on institutional clients, offering a US-based validator option, a massive staking scale. As of March 24, 2026, Bitmine staked 3 million ETH, making it one of the largest, if not the largest, Ethereum staking entity globally. All right. Maven operates primarily within the U.S. Strategy under Chairman Tom Lee, the company is shifting to become an ETH-centric treasury, using Maven to generate consistent staking yields from its massive holdings. All right. Future growth, Bitmine intends to transition all of its remaining unstaked Ethereum into Maven, anticipating $300 million in annual staking rewards. Good golly. So Bmnr is going to be making $300 million when annualized from staking yields, just for staking the Ethereum that it holds. So as a shareholder, I love that. I am absolutely loving that, because that could be either, creative, in several different ways. One, maybe a dividend payout in the future from Bitmine, or maybe they use that money and just compound it, continuing to buy more Ethereum until they reach that 5%, or, they continue investing in moonshots, right? There's several different ways that they could use those rewards. So huge deal, at least in my mind. So pretty happy as a Bmnr shareholder. All right, so that will do it for this stream, ladies and gentlemen. All right, I hope you guys got a lot of value. We're pretty much at the hour, all right, hour and 4-minute mark. Again, appreciate the 100 viewers on X and the 28 viewers on YouTube. I will stick around for the next couple of minutes in case anyone wants to throw any questions into the chat or want to bring up anything, relating to this stream. As a matter of fact, let's see, what is today? Well, today's Wednesday Eastern Standard Time, but for me, not. It is Thursday. So if anyone wants to come on and, chop it up, I will throw the invite into the YouTube chat. All right. So if anyone wants to come on, of course, if you come on, just keep it PG-13 and we can always talk about, again, anything and everything related to the stream, what you're doing, maybe some of your thoughts on what's going on, et cetera, et cetera. So let's see what we got here. So we did cover a bunch of stuff. Let's talk about YGLD, because I did say I'd come back to this or at least talk about it. So this is from Simplify. All right, this is what I'm one of the contenders that I'm considering for my portfolio. Like I said, I already have a pretty decent allocation to GLDM and a very healthy, obsessive amount to IBIT/Bitcoin, and I'm under the part of the thesis that you had last year. You had Paul Tudor Jones, and you also had Michael Sonnenfeld, Tiger 21 founder. Tiger 21 founder, he basically surveyed his members, and in order to be a Tiger 21 member, you need to have at least 100 million in assets or in net worth, whatever it is, right? So just because you have $1 million, you're not joining this club. This is the ultra wealthy. And as part of that club, he surveyed his members, and he said, that a lot of people are focusing on gold and Bitcoin, right? That gold and Bitcoin will have a place this year in 26 in people's portfolios, right? They're allocating less to equities and more to gold and Bitcoin. So I took that as part of my, kind of thesis, and that's why I'm, pretty much heavy in gold and Bitcoin. And I'm going to continue adding to them. But anyways, back to this ETF, all right, this specific ETF. So let's see what we can look at here. Let's pop open the prospectus. We don't want to demonetize your stream. My streams are not monetized. My streams, I don't monetize these streams. I keep the ads off. And the only ads that I have on are on all my videos that I've done in the past. And I'll just leave those on. I haven't made a new video in a very long time. So yeah, I'm not really exactly rolling in it from YouTube ad revenue. Damn, there was something in here. Let's see. So this is the income generating strategy. They're using put spreads and call spreads. Excuse me. And so we're going to do a quick comparison, but this is how they're able to outperform. They use gold future strategy. So let me pull up real fast a quick comparison of some of these gold funds. And it does pay monthly. Let's see, YGLD. We'll do GLD for spot gold. KGLD. We'll throw in a little KGLD in the mix. Okay. So we're going to do since July 7th of last year, because that is a better comparison. That's when all the funds were available. Okay. Who broke this machine? July 7th. So here's a quick, just, down and dirty, back of the napkin comparison for price return for YGLD, GLD, and KGLD. All right. So obviously KGLD is is killing it. YGLD down substantially because of those futures contracts. Right, it has leverage in there pretty much. I mean, is the way you can look at it. GLD, of course, up 35%. All right, actually, KGLD is really nice when it comes to price return. I mean, I would be super happy with that. But when we look at total return, this is where you get the full story. All right, wow, actually, YGLD is underperformed. Damn, it's been a long time since I did these comparisons. But anyways, KGLD from Curve is actually killing it. All right. 37% for KGLD, gold still up 35%, and then YGLD at 30%. All right. So whenever I do these comparisons, I'm more interested in the price return, right? And the reason is because I anticipate to spend the dividend, right? I anticipate to spend the distribution all the time. So like I said, I already have a substantial position in GLDM, which is pretty much GLD. But I wanted to have some type of way of generating additional income. So if I do that, if I do include a income ETF, it could be one of these two. One of these two. I haven't really gave too much thought about the other one, GLDN from X Funds. It does have the miners in there, so I do like that. That is pretty cool for me. But if I wanted a pure play, if I wanted something just for price, which is really what I'm leaning towards, I'm going to consider GDMN. And using the same compare, I mean, look at that. I don't even have to really show you guys, but look at that, right? 241% over the 1 year before this drop. Okay, so it's almost down 100% from its highs. But let's take a look at that same comparison. And again, when I'm looking at this, when I'm looking at gold, for at least for me in my portfolio, while income is attractive, it doesn't, it's not going to be the end all for me, right? I don't have to include an income sleeve when it comes to gold. I like the idea of probably a higher gain than anything. But if we look at that from July 7th of last year, you guys can see GDMN returned to 77%, whereas GLD returned 35%. So that's almost double, or a little more than double what GLD did. Definitely more than KGLD, and definitely more than YGLD. So that is it. Let's see what we got here. Yeah, is it Skeptic's turn? Skeptic always be bringing good topics of interest. Well, he always be bringing the best ETFs, man. These fringe ETFs. And a quick shout out to the Working Investor. Check him out on YouTube. But he's actually the one that put me onto GDMN. So GDMN was something that I was really looking into. All right, so we have a ETF from Skeptic called PRTO. All right, let's take a look at PRTO. I definitely put Porto. The Pareto, like what? Or Pareto, like Pareto principle? This is a title fund? I'm guessing this is who runs this fund? No, this is definitely not it. Okay, that's fund strat. That's not what I want. Again, with these fringe ETFs that nobody's heard about. Man, who makes this damn thing? I think my internet broke. Oh, was it Invesco? Anyways, Anyways, man. So PRTO is equities, bonds, commodities, metals, and Bitcoin. So it's basically everything. It's an exchange traded fund designed to provide strategic asset allocation as indicated by Bloomberg.com based on Robinhood data. It provides exposure to a variety of holdings, sometimes including equities. It is listed on the exchange for trading similar to other ETFs. Ticker PRTO. Fund name is the RCN Pareto Strategic Allocation ETF. It is from Market Chameleon. This is such a disgusting website. This thing looks like it was made in like 1998. All right, man. It's just this is a weird fund. Is this it? No, this is not. I'm looking for the product page. Anyways, man, enough with that. Yeah. Do you have the link? So we have from Sergio. Can you talk about the semiconductor space? I don't even know what to cover in the man. I haven't seen. I honestly these last couple of days I've been out of the mix. Aside from all the major events that have been occurring, especially globally, I haven't really been keeping up with the semiconductor space. I know ARM, ticker ARM, came out with a new AI chip. ARM is a British company, if I'm not mistaken. Let's see. All right, I see your chat here. Let's see. Damn. This is such a weird fund. Okay. All right. So this is the PRTO fund. Let's take a look here. All right. Is an adaptive allocation exchange traded fund and employs rules-based systematic strategies to adjust the fund's exposure as markets and economic conditions are changing, with the primary goal of generating growth while simultaneously reducing downside risk exposure, thus attempting to create a smoother path of compounding over time. When did this debut? 13 million assets under management. This has to be a very new fund. Skeptic, when are we going to just launch a fund, man? Okay, so here's the holdings. All right, so they got, so there's a bunch of ETFs. Oh, they got a single stock, a little defense stock up in here, a little Lockheed Martin. They got international futures, managed futures from Simplify. They got the legendary SCHD up in there. Their largest position is the Russell 2000. So they're betting big on small cap with gold as a second largest. And then they put the S&P 500 large cap and then QQQ as smaller allocations. I mean, I like it, but hold on a second. When did this thing come out? Your favorite sub-advisor's title. Yep, absolutely. They got their hand in everything. From Remark, hey, welcome back, man. I haven't seen you in a bit. Just put some money in OVL today. Hopefully gets taxed similar to other cover call ETFs with ROC and 1256 contracts. So that is a fact. They did publish something on X. I'd have to look for it, but they did publish something on X. I think somewhere like 90 something percent of it, probably more than that, was return of capital. From the OVL fund. I'm looking at the OVL fund. I'm again waiting for the indexes to drop, hopefully 15-20% before I'd really dump in. I do like OVL. It is, to me, one of the more attractive index funds out there, but I want to see how it's going to perform over these next couple of months with that higher distribution rate now that it has. Because again, that's going to play a part. Some of the secret sauce that they do have that I thought Income Architect was going to cover in his video of OVL. Some of the secret sauce that they had was they were doing, they're using their strategy like normal on VU, and instead of distributing VU out, what they were doing was just holding it in their fund. So they were realizing no tax consequence from that. Right. So they're just transferring it in within the ETF and then holding that money. So they were able to outperform VU because of this, right? VU, the underlier. But now they're going to be paying all of that out, right? In that 10% distribution. So, what happens to the NAV? Of course, they're going to have to pay out, right? In a bad year, this fund's obviously going to do bad, right? My big, I guess, suspicion, if you will, is if we have a sustained downturn, how will it recover, right? How will it recover? I think that will be very telling, because if it's going to return, half of whatever a full day's, gain is, then you're going to have capped upside, right? But this fund, they are saying that there is no capped upside for OVL. And that to me is what makes that very, very attractive. You have some other ones out there that came out from Tap Alpha and some from Neos that are the boosted funds. They're using swaps and a little bit of leverage, 1.5 notional exposure. So you'll get, some better returns in an up market. In a down market, that's where things can get really spicy for these leveraged funds. Vu the Underlier sounds like a supervillain. Being an investor sounds like a supervillain. Yeah, it would 20x the opposite direction. You would lose 20 times your money. You'd be negative 20. Have an inverse. We need an inverse huge ETF. Speaking of inverses, let's see what the challenge is looking like for today. Oh, there we go. We got a lot of green up in here. Okay, so for Evil Duck, I had to remove that silver fund. I will add it back later as a silver Canadian fund. I will add that back later. For Victor, he's looking, his is still not populating for that ATCX. But across the board, it looks like we're doing pretty good, except for Citizen of the Year, who went all in on MU, and for Dividend Rocket, all right, down 19 basis points. But everyone looks like we're able to get back up a little bit, which is nice. Pay Me in Dividends, I think, is the one winning this challenge so far, up 111,000. He is up $11,000 versus pretty much everybody else. I think even if we factored in your ATCX Padre, I think even if we factored this in, you'd still be under 100, if I'm not mistaken. I think you'd still be sub 100. So Pay Me in Dividends, he went in with DTREF, which is his biggest gainer year to date. Coke up 22%. Reddit up these are weights. Excuse me. Hold on. So those are his weights. So gains. So total change. All right, total percentage change. DTREF up 54%. All right, Netflix up 10%. Coke only up year to date, it seems. Yeah, I'm going to assume year to date is only up 59 basis points. Meanwhile, his biggest loser has been Reddit. Let's see what else we got. I just assumed doing put spreads would limit upside like doing cover calls would. Man, when they start getting into all that fancy language, I got to lean on other people's videos. I usually have like some notes or something that reminds me what these are. I don't do them. I'm not a options expert at all. I'm not even an options novice. I have to reread some of these strategies and understand what they actually do to get like a comprehension of them. VDI, SGov or SGOL, Sylvie, and Bitcoin in the same ETF was not my investing radar. Is that what that PRTO is? Because that's actually kind of cool. Let me get rid of this. PRTO. I don't want to switch screens. Let's take a look at this. Let's see what it does have. VXUS, SGov. Actually, they do have SGov in here. Yeah, I'm looking at it right now. They do have SGov in PRTO. They have, why do they have IAU and they also have GLD? They have FBTC, Fidelity Bitcoin. I don't see IBIT in here yet. They have Box. What the, man, they have a bunch of crap in here. Holy hell. Yeah, they have SLV, they have VTI, ASML. They have MSTR. Let's go. They have MSTR in this fund. Let's go. They have Bitcoin. They have Grayscale's Bitcoin fund. I still don't see IBIT in this fund. I guess they didn't want to give BlackRock their money. That is interesting, though. That is interesting. That is really, really cool. Holds VTI and S&P 500 in fund. Yeah, they hold a bunch. They hold some repeats in here. Not repeats, but similar funds, like funds. Actually, pay me in dividends. I think he was following this company for a little while. I don't think he learned this from you. He's not really active in the Discord. I forget. I remember I was talking to him about it, and he said he already had a position in it in his actual portfolio. So he definitely beat me to the punch, at least. Yeah, Skeptic definitely always comes through with a interesting ETF. Always, always. I told you, Skeptic man, we need to get you on the live stream, man. We need a co-host one day, even if it's for 10 minutes, man, where we just go over a ETF, because you follow these ETFs way better than I do. I can't keep up with all of that stuff. Let's go. Let's get me back to 90. Come on, let me get back to 90. Let me get back to at least my cost basis for everything. I'm down 10.5%. Looks like Evil Duck, again, we don't know what that silver one is, but he's probably hovering at about, between this and maybe 15%. Because I think the silver one, the silver Canadian company he had a bit of a pullback, but it's still up by a lot. Let's see. Since in the year, down almost 8%. Super Straight Guy down almost 7.5%. 7% for Dividend Rocket. Bank Shop Bobo. Shout out to you if you're watching the stream, down almost 7%. Serial Beggar, which I still can't believe this dude is barely touched. I still cannot believe this guy is barely touched. He picked a bunch of random He picked a bunch of random symbols that just spelled his name out, and he's actually doing really well. He's down almost barely, 1.6%. Okay, is down 1 point, or Alex is down 8.38%. He had Palantir, Amazon, Home Depot, Walmart, Spotify, Tesla, and American Eagle. Excuse me, not Arrow. American Eagle. Victor is down 8%, but again, we can't count this ATCX because it doesn't populate. Absolutely crazy, man. It's like someone who barely even put any thought into his portfolio challenge is doing better than most of us. Absolutely crazy. All right, well, we'll see how this turns out at the end of the year. We will see who's the winner, who has the best gains. Of course, hopefully Evil Ducks returns. I'll have to add that in manually if it doesn't populate, and then the same thing goes for Victor Crooks, i.e. Padre, i.e. Tungsten Tiger. All right. Well, ladies and gentlemen, that'll do it for me for this stream. I really hope you enjoyed it. Shout out again to the 114 viewers of this stream on X and to the 29 viewers on YouTube. I do appreciate you guys joining me for this stream. I hope you found it entertaining. Hope you found it at least a little bit educational. Hopefully you got some value from it. At the very least, I'm hoping I'm not wasting your guys' time. So outside of that, I will see you guys in the next stream, which I don't think will be tomorrow because I will be away from the desk again for a little bit. But I should be available for Friday, and I'm going to try to be available for a Sunday Invest and Chill session. So I will see you guys in the next stream. You guys have a great rest of your evening, great rest of your day, wherever you are in the world, and I will see you next time. Take care.